Hello, everybody. We're back. It's time for a little truth or skepticism today, Mr. Radigan. I'm Tom Sosnoff. He's Dylan Radigan. How are you, Dylan?
I'm pretty good. And I'm thinking, you know what the truth is? To stick with the title of the show, the truth is, if you're going to steal, like Elizabeth Holmes was quite a thief. I think they put her in the can today or yesterday. I saw a picture of her. They were throwing her in some jail in Texas. You're better to steal from sophisticated investors. Sophisticated, greedy investors are the best people to steal from. That's the truth.
Sophisticated, greedy investors.
Yeah. So like, if you're stupid enough to think that some person has the ability to do blood testing without taking blood, and they have no demonstrate. I think Fortress lent them $100 million. I read at one point, I don't know if they did or not, but I read in the paper that Fortress at one point lent Theranos $100 million cash using Theranos IP as collateral. And the IP was their blood testing methodology, which was non-existent.
So are you mad that Fortress took a shot, or are you mad they took a shot with Elizabeth Holmes? Because if they had done the same...
I'm not mad at all. I'm not. I have no...
No. I didn't mean mad. I didn't mean, are you mad because you don't have any money? I understand that, but
you're saying by proxy, I see. Okay.
Yeah, by proxy. I mean, are you... See, if Fortress had done that with Elon Musk, or they'd done that with Steve Jobs, or they had done that with Jeff Bezos or Mark Zuckerberg or whatever else it is,
sure,
and it had turned into being one of the greatest investments ever, they would be hailed as, they'd be...
The big shooter took the big shot.
That's right. That's right. They're the next. They're basically it's
Fortress is a kingpin. Look at the balls on these guys, and look at the
exactly. It's the same thing. You bluff with nothing, and if you win, you're a freaking genius, and if you lose, you're a freaking idiot. So I don't know. The problem, the mistake that Fortress made is not that they bet on. Is not that they bet on whatever the technology was. Like you're saying, like, they don't know. They're not betting on that technology. They just made a bet that Elizabeth Holmes, they made a bet that Elizabeth Holmes was the next Steve Jobs. They made that.
Well, not only that, but again, it's crowd theory, not to interrupt you, but this goes to the whole thing where if the other guy, why do I have to do my diligence? Because Sequoia did the diligence,
of course.
The diligence, where Tom Sosnoff did the diligence, and because these smart rich people did it, I don't have to. Like, that really is the magic trick.
Do you know how many investments I made because I asked who else is in?
So that's all. That should be a subject right there. Like, the entire premise of investing on the answer to that question, which goes to the top. Goldman Sachs does it. BlackRock does it. The sovereign wealth fund of the UAE does it. I mean, it never ends.
I mean, I made an investment once in a company that I'd met this kid, young kid. Like, when he was 14 years old, he had done all this incredible stuff. He had like 10 million followers. And when he was 14, and when he finally came up with a product, he was like some prodigy out of, Notre Dame. I forgot what school he went to, but he was some dropout. He had the whole freaking Zuckerberg story down to, down to the every single thing. All right. And he comes
down
in here.
To Z and Zuckerberg.
Yeah. And he comes in here and he gives me the pitch, and he was talking like over my head. I didn't really understand it. I go, and I'm like, I asked a couple of questions. I kind of got it. And then I'm like, all right, who else is in? So he gives me some guy's name who I've known for 20 years as one of the best freaking floor traders in Chicago. Like, this guy.
A guy who picks the winners.
Yeah, this isn't some guy that's coming born with a silver spoon. This is some guy that's he's he's a badass pit trader, okay? Somebody that would basically,
he'll eat your lunch and he'll do it 3 times before breakfast.
He will chop off your head and blah, blah, blah down your neck, the whole deal. This is that guy. And, and he would kill from the person standing next to him. All right.
He's in. He's in.
Not only is he in for some huge amount. Okay.
He's in big. He's in big.
Right. He's in big. So I go, fine. All right. I'm in. I put in a number bigger than I want it to be. So anyway, fast forward a couple of years, 4 or 5 years later. 4 or 5 years later, this kid disappears. The whole thing blows up, goes bankrupt. All right. So I reach out to this guy and I go, hey, what the F? You know, like I wasn't really paying attention. I go, what the hell happened? Because we knew it.
Reached out to the big guy who was your reference.
I go, hey, what happened here? I'm just curious. You know, like I wasn't mad at him. I'm just, what? I go, I only did this investment because you were in. And he turns and he goes, hey, I only did this thing because you were in. I go, oh my God.
That's the best scam in town.
I go, oh my God, we got picked off by this kid. He sold me that you were in, and he sold you that I was in. And he's like, he goes, I figured you did all your due diligence. I go, what are you talking about? I don't have time to do it. I figured you did everything. And he's like, oh man.
Fortress figured that whoever, I remember the list of Theranos people, or Madoff, by the way. I mean, or Sam Bankman-Fried.
Sam Bankman-Fried is even a bigger case because Sam Bankman-Fried, what Sam Bankman-Fried did was, from the grift side, was genius because he went after the big, dumb funds like SoftBank that really only care who else is in. They don't even care. They don't even nobody looked under the covers.
They don't want the business model. They don't want to know the
Yeah, but here's the crazy thing, Dylan. In the world of artificial blood, or whatever you want to call it, in the Theranos world,
blood testing.
In the blood testing world, you're asking a bunch of shooters, hedge fund guys, prop traders, shooters, whatever you want to call them. They're all just risk takers.
Money people, ego and money people.
Poker players, money people. They don't give a rat's ass about biotech and blood. And this is the kind of stuff that grosses them out. Okay? But in the case of Sam Bankman-Fried, that's their freaking
money
business.
Guy.
That's right. That's their business. Like, the thing that always pissed me off about Bernie Madoff is that he raised money from people in finance in an area where these people all freaking knew,
or should have known better. You don't do 15% every year, no matter what.
And
it doesn't exist statistically.
You don't grift a grifter. That's the whole thing with this. This whole, you got to be, really. It's very hard to grift a grifter. So I was kind of the one that surprised me the most is Sam Bankman-Fried,
because it was a money man against money man.
Yeah.
But that goes to that goes to this power of greed and momentum and all those things. But the bigger issue here is it morally, for the kid, let's just use your example, for the kid that played you against the big guy there and played you both off of each other to pick up some money to do whatever and didn't work. Is it less immoral for that person to do that to you and your buddy, or whoever this other fellow is, than it is for that same kid to do it to steal money from the orphanage, metaphorically? Like, is theft black and white, like in the biblical sense, or does the context of the grift differentiate the magnitude, the degree to which it's offensive?
So you're going to get all heavy with me today.
No, there's no heaviness. I'm just saying, I'm asking you a very simple thing, which is it better to steal from the rich? Does it matter who the target is in a grift?
I had this discussion last night with Tony, and I'm going to say that to a crazy extent, and I'm not even sure why I'm even saying this, but I kind of feel like it matters. And I don't know why. I'm not making it right.
I agree with you. It's like, intellectually, I feel like it doesn't matter, but emotionally and reflexively, I feel like it's very, very much matters.
Yeah, I feel like, yeah. It's the craziest thing.
Yeah.
Like I can't, I don't want for 1 second to sit here and say anything Elizabeth Holmes did was okay on any level. Same with Bernie Madoff, or same with any of these other grifters, whoever they may be. But I kind of feel like, you know, the Wells Fargos of the world that ripped off all these, you know, like little investors that just were opening a bank account, or the Sam Bankman-Fried that took, you know, millions of people's money if they had $2,000, you know, basically scarfed the whole thing. I kind of feel like those people are worse.
The people that the Wells Fargo is worse than the Elizabeth Holmes. Metaphorically.
Yeah, metaphorically.
That a rich person.
I don't even know why I'm saying that, but yeah, I feel like that.
So the kid the kid that goes after Tom Sosnoff and Party Boy is bad news, but Tom and Party Boy honestly should have seen it coming. Like they do. Like, if you're not going to do your diligence, and you're going to be.
I'm not saying I should have seen it coming, but because there's obviously things that we just don't know. I mean, the amount of resources we have individually and the time that we have to do things, you know, I mean, it's easy for me to explain why I don't do due diligence when I make investments. It's a lot harder if I was investing in SoftBank for 1 second to say, or Fortress, like you were saying, if you're an investor there, it's inexcusable that they didn't do their due diligence. How does anybody?
The fee that Fortress is charging you a huge fee.
Exactly.
Arguing that they're the ones managing diligence.
Yeah. I mean, my experience with private equity firms, which is only, I mean, we've talked to a number of them. We only raised money with one private equity firm in 20 years. We've raised, in over 20 years, we've raised money 3 times with the same private equity firm. Although we have had bids from multiple firms, they do an incredible amount of, you know, they dig deep. It's not like
diligence. They actually went in. They're like, show me how do you make your money.
Oh my God, they rip everything up.
How do you spend your money, and who's in charge, and what you govern, and blah blah blah.
Yeah, I mean, with respect to us, I can't speak for other people, but with respect to us, they ripped apart everything we've done, everything.
So here's my comment on that: the bigger the deal, the less the diligence.
Yeah, I agree, because there's so much money out there chasing return that they don't want to miss it. Yeah.
I mean, there's a story about a media company that I won't name the media company because it's not appropriate. But it was a media company that was a digital media company, hot stuff in between, let's say, 2010 and 2020. And even the people there were they were raising 250 million, big clicks. You know, there was a multi-billion-dollar valuation, and I was friends with some of the founders of that company who would call me stunned, and they'd say, "We just closed $250 million, basically on a CEO indemnification letter that said, listen, everything we're telling you is true, and if it's not true, it's our fault." And all the diligence was waived by virtue of the indemnification letter. And that would never happen with a small deal, is my point.
Never.
Like, that only a giant deal in a hot industry where everybody's chasing would you ever consider being, okay, I'll do $250 million on an indemnity letter from a CEO who the CEO probably doesn't even know whether the numbers are good or bad. Anyway.
100%. 100%.
The ultimate grift right now may have become AI. Moving forward here. If you look at the NASDAQ, and it's really not the NASDAQ, it's like 5 names or something in the NASDAQ, or 7 names, or 3 names, or 1 name if you look at NVIDIA, depending on how you want to rack it out, is either whether it's NVIDIA or the NASDAQ. I can remember there was a moment, I remember it very clearly because it was in the middle of the pandemic and I was holed up in Turkey. And you call, and this is when we were just doing this as a phone audio podcast. It was a few years ago, we were just talking. And you said to me, Apple just crossed $1 trillion. It was like Apple was having a moment of obscenity in terms of its equity value, its enterprise value. And you just said, listen, there's no world where this can possibly, like, you have to short Apple. You got to do it. And you were right. Apple came back to earth. There's another quote recently of Scott McNeely at Sun Microsystems where he was basically talking about when their valuation, I mean, this is dating myself a little bit, but Sun Microsystems, for those who are younger, had an NVIDIA style moment for a moment. And I guess it was probably in the late 90s or something. And even Scott McNeely said, listen, if you're going to pay me 10 times revenue as a multiple, or it was 100, some ridiculous multiple of revenue, it means that I have to pay you 100% of my revenue every year on a cash flow basis for the next 10 years in order for that valuation to make sense. And in order for me to pay you 100% of my revenue, it means I can't pay my 39,000 employees any money. He just went down the list of his obvious reason why you can't pass through 100% of the revenue. And I want is NVIDIA having a Sun Micro or an Apple moment here where the only direction is down? And for the stock, even if they're right about, even if the chip, I'm not saying that the chips and the AI, it's all real, sure, just on valuation.
Yeah, I mean, it's an easier argument to make. I mean, you've heard me tell my son, have you ever heard me tell my Sun Microsystem story?
I have, but I would love for the children to hear it.
1999, we're building Thinkorswim, and we're trying to decide what platform we're going to use technology-wise, hardware, because back then you needed hardware. Sun Microsystems had a really good deal in place. If you were a startup with no revenue and you wanted to buy Sun Microsystems hardware, they would lend you about 80 or 90 cents on the dollar. So for $100,000 of equipment, we only had to put up, let's say, $10,000 to $20,000.
10 grand.
Yeah, $10,000, $20,000. And a single server back then was $100,000, and it was all server powered. So we flew out to California, and myself and Woody and probably Scott, I don't remember exactly. And we flew out to California, and it was 1999, and Sun Microsystems was trading for $120 a share. We stayed in at whatever the Marriott was right around the corner from their campus headquarters. And at 8 o'clock in the morning, we hopped in a cab and we went over to Sun Microsystems. We go to the front gate, there's nobody there. And so we look around, we're like, it's 8 o'clock in the morning. It's a Monday or a Tuesday, whatever. We're like, what's going on? Anyway, so we walk around the gate. The guard's not there, nobody's there. We go onto the campus, there's nobody there. They have a coffee shop. They have it's spectacular campus, huge. I think it's now Facebook or whatever, but a huge campus.
Dreams are made of.
Yeah, whatever.
Silicon Valley dreams.
Yeah. There's restaurants, there's coffee shops. There's not a soul there. Now it's 9 o'clock. There's not a single person there. It's 9 o'clock in the morning. The markets have been open since 6:30. We're trading on like a crappy iPad with a dial-in. Basically with some kind of crazy device connected to it to get some quotes. It's 9 o'clock in the morning. There's not a single person there. At 10 o'clock in the morning, a random dog comes running up to us. We're sitting on a bench outside. We have a meeting scheduled for like 10:30, whatever it was. Nobody, the coffee shop's not open. The first person shows up in this campus that holds 30,000 people at 10 o'clock in the morning. We have a meeting in there. They go, oh, okay, people will be here soon.
Which is 1 p.m. in New York, by the way.
Yes, this is insane. We go into the building. They open up the building. Inside the hallways, they have ticker tapes running. And all that's running is Sun Microsystems stock.
SUNW is just
SUNW, and there's not one person in the buildings except for the three of us, this one guy on a bike and a dog, okay? And we're waiting for the person we're supposed to meet. It's after 10 o'clock in the morning. We've basically the markets have been open since 6:30, and they're running the tape around the whole thing.
But that stock was incredible. I mean,
there was 100 at the time. At the time, it was around $125 to $135 a share. I don't remember exact price. Okay, I'm on my cell phone at 10 o'clock, calling back to the office saying, dude, I think I was calling Scott. I'm like, Scott, I don't care how much money we have left because we're spending a lot of money building Thinkorswim. Let's sell short this company every penny we have because this is the most ridiculous. There's not a person here.
Empty building. It's an empty building.
It's an empty building. These guys are out of their minds. This stock is going to crash. I think the stock was 125. Anyway, so he laughs at me. He's like, you're out of your mind, blah, blah. See, all he sees is a chart that stock's going straight up. Anyway, they show up at 10:30 in the morning. The stock's still around 125. I can't take any more. I called in. We sold a bunch of stock at like 126, 127, whatever it was. That was it. By the time I'm on the plane the next day, the meeting was a waste of time. To go on the plane next day, I couldn't believe. I still can't get through my head what's going on there. Next day, the stock's trading like 139. It's up $10. We're getting killed. It's almost 140. Scott's yelling at me, and he's like, "You idiot!" I'm saying, "Scott, there's nobody there. It's a freaking ghost town. They're running ticker tapes." I go, "You would mortgage your house to sell this stock." About 3 weeks later, the stock drops back down to about 125. We cover the position, and we made $1 or $2 on the whole trade. It never had another uptick until it went to $3. It went from 125 to 3 nonstop. As soon as we got through March of 2000, the stock did not have an uptick for 2 years. I had that thing pegged. Now, we bought the Sun Microsystems equipment, which was great, and we smuggled it into Russia. We did all this stuff that we probably shouldn't have done in hindsight, but I just...
How is that not NVIDIA? How is NVIDIA not Sun Microsystems, not as a stock, not as a company today?
Well, I have to believe that NVIDIA is run... I believe NVIDIA's a little bit different of an animal than Sun Microsystems, so I don't think it is the same, but that doesn't mean that NVIDIA is not grossly overpriced. If you're asking me if AI stocks are like .com stocks in 2000, the answer is I do not think so. But if you're asking me, has AI jumped the shark? I mean, are we getting to the point where we're talking about the end of civilization due to AI? Yes, AI's jumped the shark.
But you're not willing to short NVIDIA.
I am short NVIDIA right now, but it hasn't worked. Last week was my worst week of the year because I got caught short NVIDIA in the earnings
In the surge?
Yeah, in the earnings surge.
Does that say
You have to hold the same mentality, though. In other words, I don't think you were wrong.
I don't know.
You were wrong.
I honestly don't know. I don't think NVIDIA is Sun Microsystems. I don't think NVIDIA is Books A Million. You know, I don't think this is, you know, is all the crazy stocks that, you know, from 1999, 2000, 2001. I don't think this is the same thing, but I do think we have reached an inflection point where emotion, you know, anytime emotion gets to these levels, it's awfully scary. And, you know, I mean, there's something weird going on with these stocks relative to valuations everywhere else. Like if you actually love AI and you love machine learning, I don't understand how you can't buy like some Chinese tech stocks right here that are trading at a fraction of the value of, you know, of like an absolute fraction of the value of U.S. tech stocks. That's one thing. I also don't understand how they're going to be able to maintain this divergence, you know, for very long.
The divergence meaning small cap versus the 7 names of glory or whatever these.
Yeah, but the weird thing is it's not just small cap. It's the Dow too. So if you look at the Dow, the Dow's not small cap, and the Dow is down on the year, and the Russell's down on the year. So you have this crazy bell shape, you know, where you have the NASDAQ up, the S&P is in the middle somewhere, and the Dow and the Russell down.
Is there a parallel you could reference to this that pops into your mind where, again, you have basically a crappy stock market, full stop, with a bizarre...
I mean, you could argue...
Performance?
I think you could... In the equity market, I'm not sure that there's a parallel, but you could argue that there is a similar parallel in the bond market because we've been inverted on the yield curve for so long right now that I think it's a reasonable parallel to make because the yield curve doesn't generally stay inverted for 2 years. And so I think that's a reasonable parallel, you know, long-term, short-term rates. And so I think that probably is something, but it's not the same thing. I mean, I'm sure we've had periods where, you know, we've gone to massive divergence between, you know, like, for example, crude oil and natural gas, We've had huge divergence between gold and silver. This is not, I mean, we're at an extreme, but it's not like, something we've never seen before.
Right, but it's also something that those extremes tend to revert. In fact, they always revert.
Yes. So there's mean reverting. So the only thing we know is mean reverting for sure. 100% is volatility, because volatility has to be mean reverting. It's just a math equation. But can price in the form of a basis spread, which is remember when you trade the NASDAQ versus anything like the Russell or the S&Ps, whatever it is, you're not trading the NASDAQ or the Russell. You're just trading the spread between the two.
Exactly.
So that spread is called a basis. That basis does, and Jacob's done some really good pieces on this, that basis is mean reverting. Just because...
That was my point.
Yes.
Again, I'm not saying that NVIDIA as a stock price is not mean reverting.
Right.
But the spread has a reversion.
Yes. So that part of this, that basis spread, that basis arb is mean reverting. And I think that is something that, that I mean, to me, it seems like the play you have to have on right now, but
you've been wrong. I mean, that's the other amazing thing that I was thinking about. And it's not just you, it's every human being that's ever done anything in the financial markets. It's hard enough to be right. And then the most frustrating thing is when you're right, but you're still wrong. Unlike your Sun Micro story, you were right to be short Sun Microsystems.
Yeah, because the timing it's so hard. Timing's everything.
You're still wrong.
Yeah.
And that's the story of every fool that's ever crossed Wall Street.
Well,
or even you're right, you're wrong.
Well, it's the fool that it's every decision, not every decision we make, but it's a lot of decisions in life.
It varies existence. You can make the perfect movie and it comes out on the wrong weekend. And even though it's the world's greatest movie, it's the weekend of COVID and your movie goes to nothing because it's like movie theater.
You spend your whole life trying to find the perfect match and you finally get married and then you say, oh my God, this didn't work out. How's that possible? I just spent 10 years trying to figure this out.
Clicking through with your formula.
Yeah, right. Right. So it's not that easy.
If you were to make a prediction as to whether the indexes, whether it's the S&P, the Dow, or the Russell, is likely to increase in value versus whether the extremity of the NASDAQ and really the NASDAQ subset, the NVIDIA-led NASDAQ subset, is likely to decline in value, do you have a point of view on that? You think the one's more likely to go down or versus up?
I think that's interesting. Until proven otherwise, I do think it's going to be that the NASDAQ might not go anywhere, but the Russell and Dow might rally. Until proven, until volatility or something else proves different, or proves something to the opposite. I think at this point, you're more likely to get the NASDAQ to stall and the Russell and Dow to rally a little bit, or maybe the S&Ps to rally a little bit, relative. I just think that makes more sense, but I don't know. Like the reason that I love this business is because I feel like it is the most level playing field, because I really believe, I mean, I know people think that somebody knows something. Nobody knows. Nobody knows anything. I don't care who it is. Nobody knows.
And yet everybody thinks that they know something.
That's the great thing about it. Same thing like in sports, except sports isn't as liquid. Same thing in politics. Everybody thinks they know something, but nobody really does know anything.
If you were to look, how do I say this? The idea is that not that AI is going to do whatever it's going to do, but that people are going to use AI to do things that have never been done, right? So that people who learn how to use AI well will drive. The reason these stocks are up so much is because people believe it's going to create a new level of utility, that it's a bigger revolution than, whatever, sliced bread, the wheel, the internet, the radio, the television, whatever, the combustion engine. At the same time, it's impossible to do a credible discounted cash flow valuation analysis of any kind, which leaves you only with the sentiment of the moment. Like, in other words, I guess what I'm getting at is the market can stay that goes to the market can stay irrational longer than you can stay liquid. So there's as much of a reason why Nvidia could double again.
Of course.
Just on the hype.
Yeah. Yeah. No, I get that. I used to not really understand that or believe it. And I have learned that over the last 10, 12, 13 years of Tasty. I have learned to become, I'm a believer now that we're never going to change in how strong our emotions get about certain plays, but that, as long as we can keep our size in check, we're going to be okay.
Chinese tech. Why is it abandoned on the side of the road?
Oh, I mean, it's abandoned on the side of the road because because people think that even if they're right, they could be wrong. And that bothers people. Like people do not like to make investments in things where there's a chance that even if they're right, they can't get their money out. And I think that legit scares people. And I think what they've seen over the last couple of years with Chinese tech stocks is that there is this, I don't know if it's a mandate, I don't know what it is, but there's something that when they get to a certain point, they self-destruct. And it's probably a mandate on some level. And so, that scares away real and dollar. It's all just dollar based. That scares away real dollars.
And why are you not as concerned as they are? Because I know you like to buy these Chinese.
Because I'm not an institutional investor. I'm just a retail trader now. And for me, selling a 20 lot or 30 lot or a 50 lot of puts, in a stock that even if it went to zero, it's not going to change my life. But I don't want that to happen. But I'm not putting $1 billion in. I'll take a risk of a few $1,000s. That's it.
The risk sizing is so
exactly.
Small risks allow you to take bigger risks.
That's right. I mean, listen, I'm a risk taker. I mean, if I think I have great pot odds, I'm going to do it. I'm not worrying about things that I can't control. Mm-hmm. I mean, the reason you have those pot odds is because somebody thinks there's a lot of risk there.
Mm-hmm. And if you were to look ultimately at the changing rate, like all the things we'll talk about, does that matter right now, or do people not even care anymore about the shift in they're going to raise rates again and mortgages are back? It's a very 2022 conversation to me.
No, nobody cares. I mean, rates are dead. I was really surprised. In fact, last week when we did the Truth or Skepticism, I told you how bullish I was in bonds, and they've had a really nice rally. They rallied from 125.5 all the way up to 128 in just the last 3 days. But I mean, rates are it's just a dead trade right now. I don't think there's anything there. I think they're 124, 125 on the low side. I think they're 130 on the upside. I don't think they're going anywhere. I think it's a dead game.
When you say AI has jumped the shark, what does that mean? If NVIDIA's not, because what I interpret, I'm like, okay, if AI has jumped the shark, NVIDIA's got to roll over, or, even Microsoft, or, all the related
names. When Fonzie was going water skiing and jumped over the shark? Okay, just to make sure. For people that don't understand the reference.
You're saying AI's peaked here.
Well,
but at the same time, you're like, NVIDIA could double again, so be careful out there.
You said...
I said it, but you agree.
I mean, I feel like anytime you get a stock that has a move that's 25-30% on earnings alone, and then they make a bunch of like when a stock makes an announcement that they're floating $10 billion worth of stock, and the stock opens up $20 the next day, that's a jump to shark moment to me, because basically the news of the dilution, which is the right move by the company, by the way. The news of the dilution was overshadowed by the company saying, oh man, we got some cool stuff in the pipeline. Anytime you can drive your stock up by 7 or 8% when you're diluting your stock at the same time, it's a jump the shark moment. Now, was it easy to trade? No, it was freaking impossible, because it was absolutely impossible to trade that opening that opened up 20 some odd dollars. You know, you couldn't run the risk of getting in front of it again. So, you know, it was a trap. But I just said it's a jump the shark moment. Now the stock's down 15, I think it's down $15 today. Let me tell you real fast. Yeah, it's down $14 right now, $15. And, you know, first down day. But I don't know, Dylan. I just feel like these stocks are, you know, they've gotten to points where I don't love the risk reward to the upside.
Do you use AI? Do you know anybody that actually uses AI other than as like a party trick right now?
Yeah, I mean, we have one person here that uses it to try to do some. We're testing it to do like when we create content during the day. Like, let's say we do this podcast, right? Like, we're trying to consider using AI to give a very quick summary of what we just talked about and post it. Like, we haven't done it yet. We're looking at it. We've got some interesting mixed results. Some of it's right, some of it's wrong, but we're testing it. I mean, I did a live I did a show not a show. I did a live seminar in Chicago the other day, and I was the moderator on a panel, and the topic was something to do with finance, but it wasn't totally my area of expertise. So I had to write up like 8 questions and send them around because I was the moderator. So for kicks and giggles, I asked ChatGPT to do it and said to see what you come up with. And the questions, they all stunk. So I threw it out. But I just wanted to see what it would come up with, because they were really basic.
But maybe the question stunk because you gave it a bad prompt, is what they would say. It's and bad answer is a function of a bad question.
Well, I gave them the title of the show. I mean, just what was there.
Maybe it was a bad title.
Okay, maybe it was, but I threw it out. I thought it would be interesting to see and then I was going to say to people, hey, I took these questions from ChatGPT to make it really interesting. And I didn't think it was. One day we did a confirm and send in the morning, Tony and I did, and we tried to let ChatGPT answer the questions. And we told everybody, here's our answer and here's ChatGPT's answer, just to see what it would be. And yeah, their answers were okay, kind of boring. You know, like to me, you know, honestly, for me, I haven't found, you know, people that code say that there's some advantages there, things like that. For me, it hasn't changed my life one bit.
Yeah, I can't find anybody whose life it's changed.
No, I just like doing fun things, like saying like, "What's wrong with Tony?"
Everybody does. It's like a party trick. But
Yeah.
I can't find a single person who is actually telling me, you know.
Oh yeah, my favorite thing so far has been tell me everything that's wrong with Tony Batista.
Yeah. Or I did it on you. I'm like, tell me who is Tom Sosnick,
Right,
or whatever. It'll be like, but it's again, this is like party tricks.
Yeah, I agree. That's what I'm stuck with. I don't get it either.
So but at the same time, also, by the way, for me, AOL was a party trick in 1996, where it's like,
yeah, when you think about that,
it was a party trick,
So when you think about the internet and you think about 1999 and everything with the .com on the end, you think about 1999 and everybody, and 2000 and another classic out of control jump the shark moment for .coms and the internet. But and after 2 years of a complete wipeout from 2000 to 2002, what happened after that? The internet's changed the world. Everything, every major company is all, is based.
You could have bought Amazon for the equivalent of $2 in 1999 or 2001 or whatever it was.
I saw it $7.50 was the lowest I've ever. I sold the $7.50 puts in there, but Apple was $12, $11. Netflix was $9. I mean, it wasn't like,
And in theory, some group of companies are those companies right now.
Oh, there's no question. I mean, I'd like to think it's IG Group, but I don't know.
Yeah. So I think
I haven't been able to prove that yet.
I think that you need to go to the board and be like, listen, if we use AI to summarize Truth or Skepticism, it will revolution. The multiple will explode.
Yeah.
If AI's only tool, the AI actually is more interesting in, I think, scientific R&D, right? For medical development, for like material science, for like we're coming into this new space age with Musk and all this jazz. Like, instead of having to run 50 experiments to find the material that's the ultimate rocket booster, that's reusable, that's blah, blah, the AI can help you make it only be 3 experiments because it can tell you why 47 of the 50 experiments would never work. So like I feel like AI has a much higher value proposition in technical domains, scientific domains, than in creative domains.
Why can't it cure cancer? If it can change the world and destroy the world, why can't it cure cancer?
I would say that it can cure cancer.
I know. Well, then why hasn't it?
Why don't you ask it?
I know. I'm just wondering. Like, that's the question I want to ask everybody that says AI is that it's fundamentally, it's dangerous. Yeah. Like I just want to know. Well, if it's so dangerous, then why can't it cure cancer?
And I would say because destruction is much easier than creation.
Is it really?
Of course. Do you think if I said to you, Tom, build me a new house from scratch by yourself with your bare hands, or you can buy lumber and nails, but you got to build it. Or if I say, Tom, burn this house down. I mean, burning things down is vastly more easier than building anything.
Yet the value of everything on the world keeps going higher, dramatically higher, and everything progressive. We talk about this all the time, that whole concept of global positive drift. And since everything keeps becoming more and more valuable, even as all the idiots try to burn everything down, the reality is that nothing ever really hurts the core, and everything always builds to higher numbers.
Which means we should buy NVIDIA.
We should buy AI. We've just come full circle.
What we should do is we should change the domain name from IG Group and tastylive and tasty, and everything needs to be .ai. That's the new .com, clearly. JP Morgan, by the way, going to be launching, apparently, again, I didn't talk to JP Morgan.
I read it.
Okay.
JP Morgan can't launch a credit card. Okay. They can't launch a brokerage platform.
Actually, yes, they can, and they have, with all due respect. They have launched credit cards.
Okay, they've launched credit cards. They can't launch a brokerage platform. Okay, they can't fill an order. Okay, they're not going to, AI is not going to change JP Morgan private wealth.
If you have the world's best tasty trader, 45 days out, mean reversion, non-extreme, highly liquid, whatever the thing is, I have a monkey, a chimpanzee, and I have JP Morgan AI Wealth Advisory. Who are you giving your money to?
The monkey. 100 out of 100 times.
Because the monkey is the only person who knows that he doesn't know.
Of course.
Everybody else is, the AI and the tasty trader think they know, even if they say they don't know.
Of course. I'm giving the monkey every time.
That's enough for today. That's the whole show. That's the monkeys.
I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism. By the way, just a little public service announcement here. If you'd like to see Dylan and myself, we are going to be together in London on June 24th. It's a Saturday morning at 10 o'clock, and we invite you to join us in Shoreditch at Assembly Hall at Shoreditch Town Hall, Saturday, June 24th from 10 to 12. Dylan and I will both be there. We have a really fun show. We got some games. We got some other things going on, sponsored by CME, IG, and tastylive. It's a free event. We'd love to see you in London. It's 2 hours long. We'll be there an hour before and an hour after. So it goes from about 9 in the morning till about 1 in the afternoon. And if you're coming to London, the Cubs are playing the Cardinals that afternoon. You never know. And it'll be the first time Dylan and I have done an event together in a number of years. And we'd just love to have you out there. Like I said, there's still plenty of room available. You sign up at tastylive.com/events. tastylive.com/events. Dylan, I can't believe it, but it's, what is that, 3 weeks from?
3 weeks away.
3 weeks from Saturday.
Yeah.
So, you know, if you're going to be anywhere close to London, come on over for the morning. It's supposed to be a really cool part of town, too. So, love to see you. All right.
I'm looking forward to it. Right? You all right? Bye.
Thank you, Mr. Radigan. Have a great week.
Bye-bye.
The content of this podcast is created, produced, and provided solely by tastylive Inc. and does not represent the direct views or opinions of any of its affiliated companies. This content is for informational and educational purposes only. It is not, nor is it intended to be trading or investment advice or a recommendation that any security, futures contract, digital asset, other product, transaction, or investment strategy is suitable for any person. Trading securities, futures products, and digital assets involve risk and may result in a loss greater than the original amount invested. tastylive Inc., through its content, financial programming, or otherwise, does not provide investment or financial advice or make investment recommendations. The information provided may not be appropriate for all investors and is provided without respect to individual investor financial sophistication, financial situation, investing time horizon, or risk tolerance. tastylive Inc. is not a licensed financial advisor, registered investment advisor, or registered broker-dealer.